Hello, and welcome to this digital discussion about the dry bulk freight futures market hosted by EEX Group. My name is Richard Heath. I work within EEX Group strategy team, and I have responsibility for our global commodities portfolio, which includes our dry bulk freight contracts. In this session, we're going to talk about the growth and diversification of EEX Group and answer the questions, why Asia and why freight? We'll also cover EEX Group's history in the freight market. How did we get to the position we are in today? And more crucially, what's next? What opportunities lie ahead? And how is EEX driving freight forward? To cover this topic, I'm joined by two colleagues from our Singapore office, Ray Ang, CEO of EEX Asia. Hello, Ray.
Hello, a very good day to everyone who is dialing in today. Very pleased to be involved here.
And Erland Engelstad, our Senior Business Developer in the Global Commodities team, also based in EEX Asia. Hi, Erland.
Hi, and good morning, Rich. It's great to be with both of you today.
Before we get to the questions of why Asia and why freight, I'm going to set the scene with a brief overview of EEX Group and our global strategy. The European Energy Exchange will be well known to many as the leading power exchange globally. Starting out as a European business operating primarily in power spots and derivatives markets, EEX has grown and diversified its offering to include additional European energy markets such as gas and carbon. Developing the business further from a European energy exchange into a true global commodity exchange has long been an ambition and one that many people in the group have worked for many years to make a reality. Key parts of the journey have been our regional expansion, first out of Europe into Asia with the acquisition of EEX Asia, and later also adding North America through Nodal Exchange. In addition to that, we've diversified our commodities portfolio from energy to include additional markets such as freight and agriculture. So that brings us neatly to the questions for today. When charting a path from a regional business to a global exchange, why move into Asia and why enter the freight market? To kick us off, we'll start with the why Asia question. We'll go a little bit into the background of EEX Group in Asia and EEX Asia itself. Ray, I'd like to bring you in here. So where did the Asia journey start?
Certainly. So EEX Asia actually started its journey as a tier 2 exchange. We were set up in Singapore just over a decade ago by a freight broker. He was trying to bring about more transparency to this marketplace at a time when the freight market was going through a transition from OTC bilateral to OTC cleared. And this also coincided with increased regulatory requirements for market participants post the last financial crisis. Throughout the years, we actually worked very closely with our market participants, customizing solutions for their needs, and slowly we started to grow our volumes very steadily. Then our ambitions were matched by EEX in 2016. They were looking to expand beyond European power, and our conversations then led to a share acquisition. After a few years of working together successfully, we then decided to strengthen the relationship even further with a full acquisition in 2018. I think at that point in time, it became really natural for us to then rebrand this part of the business as EEX Asia, where we became the Asian arm of the EEX Group.
Thank you, Ray. I mean, that gives us a good overview of the history of EEX in Asia. But why Asia? Why is it that this region is so key to EEX's success as a global exchange group?
Yep. In 2019, there was this estimate that was done by the FIA. It showed that Asia alone accounted for 42% of all commodity futures trading worldwide. This figure alone is more than Europe and America combined, right? So along with our group's ambition to be a global commodities exchange, I think it is integral for us to have a presence in each of the major time zones in the world, as well as one of the major trading markets in the world for commodities. Asia, I think, is by far one of the fastest growing regions, both in terms of GDP growth as well as population growth. I think specifically for bulk commodities such as iron ore and coal, most of the global demand for such products also resides in Asia. we have, through the years of being here in Singapore, seen a shift in recent years by major commodity trading houses setting up teams here in Asia to better understand the market conditions here, as well as to look at opportunities that are specific to this region. Hence, we see success in Asia as being fundamental to EEX Group's global commodities exchange ambition.
I think some of the key points there, it's interesting about the growth, the market growth, the GDP and population growth. And of course, this is, very, very important driver for demand in commodities, both bulk commodities and energy commodities. Erlend, perhaps we could bring you in now. You spent your entire professional life in Asia working in the commodities markets. Do you have some thoughts to add?
Well, absolutely. I very much agree with Ray's comments, and maybe I would just add a couple of points. I think number one, while we have established, of course, why Asia is such an important hub for commodities trade, what makes it also incredibly alluring for a lot of traders is that markets are still really opaque in many parts of this region, and also that trade patterns are continuously changing here. So you don't go a single week without seeing a new refinery opening, a steel mill is closing, or some new large-scale storage facility that disrupts the status quo. So I think combined, those factors make Asia really highly attractive from an arbitrage point of view. And you see smart traders who seek higher risks and hoping for higher rewards. They're constantly looking for products in market like the ones that we have in this region. My second point would be to the choice of Singapore, right? The region here with about 100,000 vessels passing through the Malacca Straits annually, combined carrying about a quarter of the world's total goods. There's no surprise that all the major commodities firms globally are really present here. And it really is true. Where our clients go, we need to go too.
So that's absolutely true. So Asia, strong growth in all sectors, population, GDP, demand for commodities, an important hub for commodity trading globally, and of course an area where, as you say, many of our clients are relocating to or starting new businesses in, and it's really important for EEX as a business. We grow markets in collaboration with our clients, and so to be close to them and to be close to the markets where they see opportunities is absolutely key. So, Asia seems like a very logical move, and in fact, listening to some of these things, we'd probably say, why not Asia? Or if you're not in Asia, why not? So Asia is, as I say, a very logical destination for a global exchange group. But freight, why freight? What's so special about shipping? Why is this market an important way to pivot from a local energy exchange into a global commodity exchange? Erlend, can we come back to you? Can you help us understand this a little bit more?
Yeah, thank you, Rich. From my perspective, freight came about part by strategy and part by circumstance, really. EEX had already stated a commitment to growing beyond these core markets that you were just talking about. And it was evident quite early that the customer base that we had within Cleartrade Exchange represented somewhat of a cross-section of multiple very interesting bulk markets, clients dealing in iron ore, grains, coal, and so forth. And freight is really the ultimate arbiter of these delivered prices for commodities. And each and every ton of available freight is really a commodity in its own right. Since 9 out of 10 cargoes bought and sold have at some point been on a ship, it was quite natural for us to think that freight could serve at the center of what was really a rather ambitious strategy to take on our competitors in other raw material markets by simply starting with the risk that they all have in common.
Thank you, and I think some of those points are really, really interesting. So I want to just pick up again on this, 9 out of 10 commodities have some element of freight, within their supply chain somewhere. This for me is really critical. It puts freight right at the center of commodity trading, and it tells us that, the vast majority of commodity transactions have exposure to the freight market, and that's a market which we know is very, very volatile. And I think it's looking at this supply chain view, which starts to communicate how we worked with our clients to develop these. I mean, if we break this down a little bit and we take an example, let's look at a core or traditional commodity in the EEX portfolio, European power. In most of Europe, power, certainly in the past and still today to a large degree, is generated by the burning of coal. But most coal is not mined in Europe, and so the coal has to be imported from South Africa or South America. And so you immediately have this freight element. And so when we talk about these delivered commodities, freight is part of the price of these commodities. So we have the freight element and the volatility in freight affecting the coal price, and therefore the coal price affecting the power price to some degree. And this is how we start to get these links of European power traders having an interest in the freight market. And when we look backwards up the supply chain in this way, it becomes really clear how this move into freight helps to position EEX at the center of many global commodity supply chains.
Yeah, I absolutely agree with the points that you just made. I think if you look 20 years back, freight was largely treated as almost like an incidental, simply like a cost of doing business. However, the volatility that comes from having this market with a very inelastic supply side, meaning that you cannot immediately produce a large vessel. So in times of high demand, rates can double or even triple in a matter of days or weeks. And this creates large risks to the P&L of industrial users and consumers. So I think developing a market that could offset those and help secure commodity margins has attracted a large customer base, and obviously one that we are really grateful for. And I think simply put, I would say freight is too important to ignore. And as you mentioned, the appeal stretches into our power and gas business too.
Now we know why freight. I mean, to me, it's very clear. This commodity is at the center of many other commodity supply chains, and we know, why Asia as well. Thank you, Ray, for elaborating on that. So it starts to become clear, why the strategy, makes sense. But of course, defining a strategy is one thing. Executing it is something different. So perhaps we should start to look at how we've progressed along this path. And maybe if we look at where EEX is in the freight market today, we can then just contrast that to how the market's developed over the last 4 years. So today, EEX currently holds 56% of the market open interest. And so far in September, we're seeing almost 50% of the volume in the market traded with us as well. And this is really, fantastic growth since the beginning of the year. We only had 25% of the open interest and 34% of the volume in January this year. So we've seen really huge organic growth across the course of 2020. The freight market itself is also growing. At the end of August, volumes year on year were up 11%. So it's very, very healthy growth in the overall market. And this combination of market growth and, of course, us aggressively growing our market share means that by the end of 2020, we expect freight volumes at EEX Group to be 10 times what they were in 2019. So as I say, really spectacular organic growth over the last year. So when we look at freight in 2020, everything looks very good for EEX Group. We're, extremely happy and very grateful to the position that we've been able to create over the last 4 years. But this journey started back in 2016, and certainly the situation was very, very different then. We launched our freight products into an extremely competitive market situation. There were 3 other exchanges at the time offering identical contracts, and we had no history in the shipping space. We were a European energy exchange. We had a clear vision though, and we also had a great deal of customer support. As I said about the supply chains of European power, we had clients who were looking for us to add products to our portfolio which helped them manage risks up and down the supply chain. So we did have the customer support, but at the end of the first year, we hadn't really been able to convert this into significant market share. and we went into 2017 with less than 3% share of the market. So we had a lot of work to do, and that work, I think, touched all levels of the organization. We had to invest in new processes and services, both within our exchange and within the clearinghouse. And we had to work extremely hard with all of our external stakeholders, our clearing members, our broker members, to ensure that everyone had access to our platform, but also our regulators as well. This was a new commodity for us. It was new to trade freight at EEX for many of our customers. And we had to work with our regulators to make sure that all of our customers could stay within European legislation, particularly the position limits regime. We were also looking for inorganic opportunities to grow our business, and we found a couple of these along the way. The first was when London Clearing House, or LCH, left the market in 2017. We managed to move a great deal of the open interest from their business to ECC. And the second one was just last year when NFX decided to leave the market, and we were able to agree a deal with NFX, that's the Nasdaq Futures Exchange in the US, to take all of their commodity portfolio into the EEX group. Dry freights for us at EEX and EEX Asia, and a whole suite of energy contracts to our exchange in North America, Nodal Exchange. So these acquisitions helped put us on the map, but it was the organic growth that really we were most proud of. And this is where I want to, break from the past and start to talk about the future. How we entered the market, how we, got a seat at the table, how we've got to a very competitive position. This is just really the very beginning of the story. The key and the critical thing to do now is that now we are an incumbent in this market, is look at our responsibility to help grow the market for the participants and improve it for everyone and really drive freight forward. And I think it's how we look to do this, which is also the key to the organic growth over the last 2 years as well. So how do we do that? How do we drive freight forward? Well, within the Global Commodities team, we have 3 main pillars that we really believe will help us to develop this market. And those are building market transparency, offering additional value-added services to the market and to our customers, and expanding our product portfolio to offer complementary products. Erlend, let's come back to you again. You're our senior business developer in Asia and in the Global Commodities team. Can you help to add some light to talk us through what these objectives actually mean?
Yeah, absolutely, Rich. So I think now we're at the core of what will get us into this next phase for this global commodities segment in the EEX group. I think the momentum that we currently experience in freight that you have just described allows us to be a lot more forward-leaning in how we help define this market. And as regards market transparency, our goal has always been to make it easier to trade and to help people in making good trading decisions. And what we're doing to help that is to constantly add new iterations to our internal systems to help support that. I think by extension, the development of this global commodities segment serves as a sandbox in a way for the EEX group, where we are developing services and markets for a group of clients with very distinct requirements from those in typical landlocked markets like electricity and gas. And that includes how people trade, at what times they trade in the day, what the reasons are for why they trade, and also, very importantly, what infrastructure they need to manage those risks. As it comes to value-add services, the strength in having a large market share like we have in the freight market with thousands of timestamp transactions, it also means that we can provide quite accurate analytics that are drawn from this aggregate data sets that very few others, if any, would be able to replicate. A part of operationalizing those assets was the setup of an analytics and transparency model that we call the portal. And from this interface, clients have real-time access to a range of data that help them track their positions, analyze exposures, value options, and overall just make well-informed decisions. Our strong position in freight also really allows us to explore new avenues of growth. and we are constantly looking for these windows of opportunity. And that includes the cargo markets that rely on bulk shipping, but also maritime fuels and really the energy complex as a whole. As an example, in this year, after 1st of January, the market for shipping fuels have become very fragmented with sulfur regulations. So we're of course aware that our clients also have other large risks, and that some of those risks are very much adjacent to the services that we actually already provide today.
So we've discussed the global strategy of EEX. We've touched on Asia and why Asia, and we spent quite a lot of time talking about freight and why that market is important. To anchor the discussion, I would like to bring it back to the Asia view, and Ray, if we can bring you back into the discussion. Is it fair to say that EEX as a group, we've really just started in Asia, and if so, what are we looking forward to in the future?
Yep, certainly. I think it is a fair assessment to say so. Whilst we have been making big strides in the last few years, I think we are really just only getting started. And I think we remain committed to staying in this region for the long term. We have demonstrated that a bit with our commitment to freight through the journey that we have just described today. And then besides freight, we have already started looking at collaborating with other stakeholders in the region, such as our recent launch of Japanese power clearing in the Japanese market earlier in May this year. I think we understand that there's no one-size-fits-all approach. I think in Japanese power, for example, we spent almost 2 years working with the local regulators as well as different stakeholders in the value chain to fully understand what their concerns are, and to ensure that we are launching the right product and have the right setup to support our clients. I think this is the kind of approach that we'll continue to take to look at other opportunities that are available in this region.
Thanks. I think Japanese power is a really good example of some of those principles that we've been talking about, of building markets, in collaboration with our clients. An Asian power market may be a more obvious choice for EEX, but I think with the background we've given about the region and why, it's very, very easy to see how we can start to build more markets in that region, whether they be in our core and traditional commodities, or whether they be something that at first glance, like freight, maybe looks one step away, but actually is hugely important for our clients. Thank you both for your views and your contributions. I think we should have answered those questions. I know that there will be others, and that there's more detail that we can add on particular topics. So if we stop there from our sides and move to the Q&A section of the discussion.
Hello and welcome to the Q&A session. We're very lucky to have Richard, Erlend, and Ray join us now to answer some of your questions that have been sent through. I'll dive straight in, and this question was directed at you, Richard. Market transparency is one pillar of your strategy to grow the market. What specifically are you doing in this respect?
Okay, well, thank you very much for the question. We actually have a number of different initiatives on this, so maybe I'll make an example of a single one, and that should help people to understand how the process works. So I'll talk a little bit about one of the initiatives that we have with our broker members. EEX as an exchange, we work very closely with brokers, and in the freight market, the market is 100% facilitated by the brokers, so this becomes even more important, this connection that we have with them. So what we do is we work with several brokers to integrate the market data from our platform into their various mobile applications, pricing platforms, and other client-facing apps that they have. Now, what this does is it adds live data on trade, price, volume, open interest to the live bids and offers which they put out across those platforms, and it gives clients a single place to reach quite a big repository of information, but across a broad range of platforms. So individual traders in the market can continue to work with their preferred brokers, and they have several places where they can get all the information that we can provide as an exchange. So it's that type of transparency initiative, and as I said, we have other examples as well, which we really try and focus on to make that information that we have easily available to as broad a market as possible.
I've got actually another question directed at you, Richard. How do valued added services grow the market?
Thanks. Yeah, I guess I'm popular for the questions, but that's a really good question, and I appreciate some of these things can seem a little bit nebulous. So it's good to go into examples. So really, when we think about value-added services, what we're thinking about is how do we make the barriers to entry for new market participants as low as possible, and also how do we enable existing market participants to execute their trading strategy as efficiently as possible. So again, let's take a specific example to see if we can illustrate this more clearly. Let's look at the options market and freight. So options can create a huge amount of value for futures market participants. They can use them to hedge their futures portfolio. They could be used as a hedging strategy linked to physical market exposure, or different types of counterparties could use them to enter the market and actually gain exposure to shipping. So, but when someone's looking at putting on their first options trade, there's a lot of questions. How will a new options position affect their existing portfolio? What would that effect be over time if fundamentals change? What would it cost in terms of margin? What are the latest prices and volatilities? Where's the open interest? Where is it on the curve? At which strike is it? And these are all questions that as an exchange, we can answer. So again, our task is to take the information that we have and provide it to the users in a easy to get hold of, simple and intuitive format. So the more information we can provide related to options across all these questions, the more users we can attract from the market. And with every new user coming into the market, that increases liquidity for all. So that's just one example of how a value-added service, which reduces barriers to entry, can help to grow the market as a whole.
Yeah, that makes sense. Well, I've got then another question, but this time I'm going to direct it at Erlend. So, can you tell us what your plans are for launching complementary products and what markets will be next?
Thanks, Oliver. That's a very interesting question and one that we could spend quite a lot of time on, I guess. Well, let me say it like this. As an exchange, we need to evaluate these types of opportunities that come into scope really carefully, and we need to strike a balance between filling the more immediate gaps in the market, but also provide products that have some expected longevity that can be sustainable for us and for the market as well in the long term. So naturally, since we are deeply rooted, as you've heard, in the maritime industry, we're looking at several potential new products in the shipping space that our stakeholders are very explicitly asking for. I think the other key for us is that we listen really carefully to what our clients say to us. So the commodities industry is, of course, as you know, not very homogeneous. So it is really important for us to find challenges that are common between our clients, and we spend a lot of time studying trade flows, new markets that aren't properly served, and then structure products directly in collaboration with our clients. As it comes to specific products, we're not really yet ready to communicate exactly what products will be next, but we hope to be able to do that quite soon, and we really look forward to announcing the next phase for EEX in markets here in Asia.
Oh, fantastic. And then I'll just direct this next question to Ray and be fair. Japanese power is an interesting development. Are EEX Group looking at other power markets in Asia?
Definitely, but I guess as a global commodities exchange, we are not just interested in power markets by itself, but we're also looking and continuously following the development of many other markets here in Asia. I think, in order to assess whether we are able to enter any new market, we are continuously talking to different participants in the value chain, like the market users, the traders, the brokers, clearing members, and even the regulators. And I think at a point that we believe that the market has reached a stage where we can, as an exchange, deliver benefit to the users, that is the kind of time that we will look to enter the market. So I think we expect more developments next year and the years beyond in our Asia Pacific business, definitely.
Amazing. So interesting. Thank you so much for joining us today.